Hello everyone, good morning. Um, I'm gonna do a video to highlight to you all like what will most likely happen come Monday. A lot of people maybe will be interested to maybe hear my viewpoint on this. So, the function of um trading, right, or to understand, what will happen, we have to think of not just from the retailer's perspective, of course. If you think of retailer perspective, you'll be loading up, and topping up your account balance, so on and so forth, to ensure that you can anticipate the volatility that comes, right? But that is also the same with funds and institutions. But these all are primarily the participants in the market. But we have to think of also what the market makers and also uh, owners of inventory. So what I mean by owners of inventory is that, think about it, a fund or a quant or a market maker, they don't look at the uh, pricing, right? They don't look at this as like, oh, buy and sell. They're actually looking at this as the number of shares that they have in their inventory, right? And also the ability to trade in profit from the inventory. So what I mean by that is that for a typical retailer, right, you'll be holding shares or you'll be thinking of, okay, I want to buy the dip and so on and so forth, or um a couple of features of that lah. But basically, I'm what I want to share is that for market makers, generally what they do is that they are looking at their product. So suddenly when there's a crash like this, right, they're actually holding on to negative equity, correct? Like they're holding on to product they are losing money. So think of it like they imported a whole bunch of Coca-Cola drinks for like $1, and then after that, suddenly the market went to 80 cents. So they are actually holding on to all this at 20 cents loss, right? So what would they do? Or if you look at my entries, it will be also easier to see like this. Of course, mine is forex currency, but the rationale is more or less the same, right? Is that I'm holding to a whole bunch of losses right now, right? And what would I do over here, right? So as a market maker, right, the market maker generally what they'll do is that they will continue to buy, right? They will continue to buy so that they will control this. This is my view on what's going to happen. There's a few scenarios that can play out, right? Given that the nowadays the market is that one tweet can change the whole environment. So considering that volatility, what will happen, right, is the first scenario, right? Market makers will continue loading up, right, buying, and what will happen very likely is that you will see this is the first scenario lah. Wait, let me see. So the first scenario will be the buying, right? And then it goes into this you know, this spiral, and it comes down, right? And it fills the orders. And then after that, it will consolidate and consolidate and consolidate. So we will see this as the first likely scenario. The second likely scenario, right, is that they wait for a next price point so that they go into the major support and resistance. So they'll go into major support and resistance, right? At this point, I think most have broken support, but they will continue going, and then they will do exactly the same thing again, right? Buy to control the price, right, and average down their inventory, and then subsequently they will do the same thing. They do this thing called the consolidation. So they'll consolidate, right, and then eventually the price will come down. So the point about the price coming down, right, is because they need to get out of their position. They need to sell off their inventory. So in these kind of volatility events, it is very likely that uh, that's why they call it a buy the dip, right? Because of the fact that it is very sudden and there's a lot of inventory that is unsold over here. So if you think about it in terms of market makers and quants, right? What they would do is that they would actually have a lot of inventory over here, and their job now, their primary focus is to offload the inventory, either in a tight losing position, or tight losses. That means very very little loss, or if not, they will break it down and get out in profit. That's generally how the market functions. But of course, the third scenario, right, which is the crash into the ABs, um, that might happen for stocks, but it's less likely to happen, in super deep liquidity like forexes and all this, because everything is correlated. So, so there's generally three points to look at is that, like, for example, okay, so I'm going to look at this Euro New Zealand dollars. So Euro New Zealand dollars is like all time high right now. So it's in discovery, and honestly speaking, not a good one to look at. But let's see if we can look at Japan yen. Okay, so New Zealand dollars, Japan yen, right? So this is a clear cut good one, right? On daily we can see that it has been consolidating over here, right? And this was the flash crash. You look at how this behaved. So there was a flash crash, right, or a drop, and inventory was not offloaded. So basically, it come here, it rebounded, right? There's a lot of buys, which brings down all the averages, right? Out, come down, right? And then basically any continue, right? Consolidate, break down, right? Break down further, break down, touch new lows, consolidate, and now it will most likely go back up. So you can look at this from this scenario, it will be quite easy to see. So I'm gonna just repeat one more time. Right. So you can see this scenario, right, is almost similar to this scenario over here. So similarly, right, you would have, right, a breakdown, and this breakdown, of course, it broke the previous resistance, correct? So you look at this, right? This was a rather big one. But then the thing here is that because of unsold inventories, see if there's a chart. Yeah. Because of unsold inventories, right? Market makers generally will buy back. Okay, they'll just buy to bring down their average price for the inventory. Because remember, this is forex, so forex a little bit different from stocks. So they'll bring it down, right? For example, bring down here, then can't get out, then bring down here, right? Bring down even further here. So once it comes to, most likely is here, lah, right? Once it comes, and then you will consolidate. So this is where they are offloading their inventory. So basically, they have like sell orders that once it goes in profit, they'll clear out, right? Okay, after done with business, ready, come back down again, because there's no need to force clear anymore, ma. So from here, consolidate, right? Consolidate, back again, right? And they'll clear, right? Come down, and then after that they will come up again. So remember that when the market maker basically have unsold inventories, they would buy to sell, because end of the day the market maker's job is to sell, right? The act of buying is to sell. So you have to understand, like, this is the very important rationale. The act of buying is to sell the product. So the entire that's why for charts generally, there is the many participants, and the retail participants will have a different mindset. So to understand the retail participants, right, retail participants generally get spooked out, and because they are long-term holders. So when they long-term hold, they come here, right? Then they generally don't buy, and of course, whenever there's a, because they are not really in the buy and sell, they're just into the back holding mode, right? Whenever there's a crash, they are actually supportive of this, and they will also buy. So that's how the price actually goes up. The price fundamentally goes up because people are buying and holding. And for market makers, their job is to buy and sell. So, so how does these two dynamics, or market makers versus funds and retailers, is that the market makers create volume. So their job as market makers is that not just they buy and sell, but they also create volume, right? Which validates the worth of a currency. So when they do that, that's where the other functions like exchanges, um, they earn through the fees, so on and so forth. So the whole system thrive. And of course, market making engines also do the same, and they are doing it on a much more rapid scale. So to this, my if I'm looking at this particular New Zealand Japan yen pair, right? My scenario is quite likely that same thing, right? It will eventually catch a bottom, probably catch over here, right? So there's another 100 pip difference, right? So it will catch over here, consolidate, right? Consolidate, and then after that, you will start going up because they need to get the positions out. So they will start buying it up, while the entries come down, and basically they will get out along the way. So that's how I see it. And of course, there's also another scenario which is the Black Monday, right? Which it will continue going down, right? But end of the day, um, for algo trading, right, how it works is that no matter how low it goes, right, as long as there's participation, okay, as long as there's fundamental participation, the price will always go back to have that harmony. So like the reason why it needs the harmony because the market forces will be working together to get all these positions offloaded, to people who are buying and also for people who are selling. So that's the reason why the yeah, that's my possible scenario. Basically, on Monday it can crash and hold and consolidate, or it can crash even a little bit more further, hold and consolidate, and it will come back up. So the idea here is that it's not a matter of whether it will go into abyss or not. The idea here is that how much more before it consolidates and come back up so that it can take off the positions. So I hope that gives a little bit of the possible scenarios. So three scenarios. So basically 2 to 3 scenarios. First scenario, consolidate right away because most funds would have really go into the defense mechanism and they would really have make sure that they have enough balance. Make sure that they have buying engines going. That's number one. Number two is that for quants and algos and market makers, they would also be doing the same thing because this is a flash crash and there's a lot of arbitrage opportunity over here, right? And the third one, right, is that another tweet goes out and the market, continue to flash crash further down. But even at that level, I think the first and second scenario is more likely because um the defense mechanisms are already there. Unlike, in this event whereby when the tweet came out 2 minutes or 3 minutes before the market closed, right? It was yeah, it was like 5 minutes market close, correct? So if you look at this, this was 3 minutes before market close. So 1, 2, 3, 4, 5. So this was more like a shock scenario. So it was the defense mechanisms don't kick in like this. But with enough, like with the weekend to plan and strategize, most would have defense mechanism. It's very unlikely that they will still further attack down. They might attack down to take out liquidity, but given that this week of candle has really taken out quite a bit of liquidity, this is like 50 pips, right? 50 pips in a single candle. So so they have taken out quite a bit of the order book and liquidity, therefore the crash like this. So in this context, I think this reaction is very likely. So consolidate, right? Come back up, take out the losing trades, right? And then renew again. So um that's what it is. In fact, if you look at how this behaved, right, it was coming back up and it was already going to take out. It's just that the news came in and the sentiments turned bad, and there was a lot of sell pressure, right, which caused the breakdown. But if this is the breakdown event, it is very likely that the quants and algos, they have not yet gotten out these positions, which is like in my case, they have not yet gotten out these positions, right? They would be stacking up a lot more over here, right? Because it's clearly uh the deviant, right, between their entry and this has really satisfied the condition for them to load up and go back up. So that's my 2 cents worth. I hope this video is useful for you, and it gives you some idea on all the charts that you can look at, and also you can see how it would very much play out. Yeah, thank you.